All right. Well, hello and welcome back to the Money Wisdom Podcast, powered by Johnson Brunetti. I'm Nick Colantuono. I'm one of your co-hosts. I'm a certified financial planner up here in our cold, snowy Boston, Massachusetts offices. We've got a very special episode and a very special guest. We are joined by none other than Eric Hogarth. Eric is also a certified financial planner and a senior partner here at Johnson Brunetti. Eric, it's good to see you, my friend. How you doing?
I'm fantastic, Nick. Also in a snowy, frozen tundra, Connecticut, a little south.
We can't complain. It's winter in New England. What do we expect?
Our kids
I was noting at how beautiful the backdrop of the Italian Alps looks on the Olympics. I know you're a big skier. Makes me want to go skiing.
That'd be great.
Anyway, folks, we've got a great episode for you today. It's very timely. I know a lot of folks I'm meeting with, Eric, and I'm sure the same is true for you, are planning on retiring, at some point during this year. Maybe it's the end of this quarter, maybe it's the end of this month. And naturally, when retirement comes around, so too does a decision to be made around Social Security. So today's question is all about how I can increase my Social Security benefit. And a lot of let's just put it this way. There's a lot of places to go to get advice out there. And you can go online, you could read 20 articles that'll say you should take it as early as possible. You'll read 20 more articles that say you should always take it as late as possible. One, just rule of thumb, I would never do anything that starts with the words "you should always," right? Nobody else finds themselves in your exact situation. So come in, sit down with Eric, sit down with myself, sit down with someone who does this all day, every day, and have a conversation that is about you, because that's where this all has to start. So again, taking it early, waiting as long as possible. You need a plan that is specific to you. And there are several ways. I think I read one time, Eric, and you could probably verify this. There's over like 320 ways to file for Social Security. I do this for a living, and even those different filing strategies can be very, very confusing. So I'd imagine for someone who doesn't do this, it can be even more confusing. So let's just talk about a few of the biggest ways where folks can really have a meaningful impact on the amount that they receive from Social Security. And the first is obviously just working, right? So the way Social Security benefits are calculated is you have to work at least to be eligible for Social Security, it's 40 quarters, so it's about 10 years. But the way they calculate your benefits when it comes to collecting is based on the highest 35 years of earnings. So if you're working more than 35 years, well, in theory, in those later working years, you're earning more income than you were in the early years, and you're increasing that average. But give us some insight, Eric. How are you helping folks navigate this Social Security decision that they're faced with in retirement?
Social Security is huge. And what I mean by that, for some folks, over 40% of retired Americans, it will be their sole source of income in retirement. And even if it is not the majority of your retirement income, which it's hopefully not, it's still significant and it still matters. And you still paid into it over decades of your life. So the goal is for you to get value out of it. And exactly what you said, Nick, is that there's a lot of similarities in the folks that we're sitting down with working in the world of retirement. And, I'm about to retire and this is where I'm at and what do I do? But everyone's different. Everyone's situation is unique. And our goal is to make sure that your family gets as much money out of Social Security as possible. So if you are in a good spot and you did do a good job saving and you're able to, I am an advocate of triggering that benefit earlier. I sadly had 2 different clients pass away last week and they weren't that old, so they didn't get a lot of Social Security checks, but it's not just about you. It's about your spouse. Maybe it's not as common, but if you have real young children, I have a client who adopted a child when he was 59, a young child. So that factors in too. So there's so many different considerations. Like you said, there's over 300 ways to trigger that benefit. And you got to make sure you pick the right one, because with so much of this stuff and retirement planning in life, you're not getting a do-over on it. So make sure you're taking the time to get educated on how do I get as much money as possible for my family out of this system that I have been paying into for what seems like your entire life.
I love the fact that you emphasized not just getting money out for you, getting money out for your family. Right. And a lot of times, whether it's a spouse or whether it's a widow benefit or something like that, there is a lot more, or I should say there are a lot more options that are available to people that, are sometimes not really made mainstream, right? So talk to us about spousal benefits, Eric. Talk to us about survivorship benefits. How do those work? Big picture.
So we'll keep it simple here. What you're entitled to for Social Security is either your benefit or about half of your spouse's benefit, right? Assuming you've been married for at least 10 years. And I'll get into the widow's benefit next. So that's a big deal, right? Maybe one of you, right? Take myself, me and my wife, Megan. Maybe one of us triggers Social Security at 62 and the other one waits till 70 to get the maximum benefit. And I'm going to wait till 70. And Meg's going to trigger at 62. And then I die at 68 and I've never drawn any Social Security. So in that moment, what Megan's option is she would then take over on the benefit that unfortunately I never received, but that larger benefit. So you are making a decision not just for yourself, but also for your spouse. So, and the rules have changed somewhat on this, and I'm not going to go into what the rules used to be because it's irrelevant because you can't do it anymore as far as filing and suspending and things like that. But it is a big deal if we're looking at maybe one of you never worked and you never paid into Social Security. So the benefit your family is going to get is the primary earner's benefit, and then approximately half of that for the spouse. Well, it's only half of that number when you start drawing on that benefit. So that would be a reason that you maybe want to wait longer to take that benefit. But when one of you dies, the larger of the two benefits remains. Sometimes people ask that question, do I get both? You don't get both. You get one of them. And that will be a decrease in income. So one more thing that you need to plan for, as much as we hope best case scenario, we also have to plan and prepare for worst case scenario, because things like I just talked about, unfortunately, with those clients that passed away last week, that is life. And you need to make sure that, as tragic as that is, it doesn't have to also be a financial tragedy.
Yeah, you're exactly right. And, one other thing to be mindful of, Eric, you and I are both happily married. There's a lot of people out there who are happily not married or perhaps happily divorced, right? So the ability, if you were married for more than 10 years, even if you're no longer married to that person, you can still get a benefit equal to half of their benefit if it's more than what yours would be, right? So again, let's just think big picture, the way it works. Married couple, if one of you is receiving a benefit or eligible to receive a benefit that's more than double what your spouse's benefit is, your spouse's benefit will jump up to equal approximately half of yours. So for a lot of people, that can be a meaningful increase in just the monthly income. And, if you listen to our podcast often, you probably realize that a lot of what we talk about is not this fund or that stock or rate of return. It often all revolves around income. And whenever you have income, you have to be mindful about taxes. So in retirement, it's critical. Know your numbers. Know what you're going to be eligible for from Social Security, whether it's your benefit, whether it's a survivor benefit, whether it's a spousal benefit. Know what's coming in each and every month. And then what's equally important, if not more important, is know what's going out each and every month, right? On an after tax, a true net monthly expense figure. And then know what you have in the background to make up that difference. And if it is not a difference, if you're one of the lucky ones who in retirement is fortunate enough to still be able to save, well, then there's other bigger picture conversations we need to have about legacy and tax efficiency and trust planning and gifting and all those conversations. But if there's a negative there, if now you are no longer saving, you're no longer working, you're no longer putting money into these accounts, and all the opposite of that is true, no longer working, no longer saving, no longer contributing, taking distributions, paying taxes on it, you need to make sure that you have a very clear and written plan in place when it comes to where you're going to go to get your hands on that money that you need when you need it. So it's all about income. It's all about expenses. It's all about figuring out what the difference is and then what you have in the background, i.e. assets, with which to make up that difference and how to unwind all that in the most tax efficient way. It can be confusing stuff, right? So again, come in, sit down with Eric, sit down with myself, sit down with someone on our team, have a conversation that is unique to. Next, I want to talk about some other factors. I even just touched on it, Eric, taxes, but not only taxes, a lot of people are paying for their health insurance in their retirement years through Medicare, through deductions coming out of their Social Security. And then on top of that, a lot of clients continue to work, maybe not full time, but continuing to work, continuing to earn income in those retirement years while they're collecting Social Security, while they're paying Medicare premiums. So talk to us about how you're solving this big jigsaw puzzle that people get faced with in their retirement years, continuing to work while collecting Social Security. How do you navigate it all?
Taxes are huge. Well, thanks, Eric. No duh. But it's something over the years that I remember my first job interview after graduating from UConn. I'm sitting there in the audience, and this big recruiter is like, "How many of you love paying taxes? Put your hands up." And like, no one has any money. I lived with my parents and drove my father's old Subaru Legacy station wagon. I was working at Lyman Orchards getting free golf at the time. And he was, "I love paying taxes because it means I'm making money." I'm like, I don't, what's happening right now? But what I mean to bring that up is that it has to be part of your plan, right? Shameless plug on the book that I wrote about 401ks. I actually put a quote in there. It was an old Morgan Stanley ad, and it said, "We all have to pay our taxes, but there's nowhere where it says we got to leave a tip." But that's what a lot of people are doing, is they're not getting involved in this, or they're not working with the right people, or your accountant's doing your return on TurboTax and you're saying, "Hey, is there something I should do different?" That is not really what their role is. And I see that as a big part of the responsibility of a financial planner and of our group. And what we do is not just, do I have enough money? Is, are you making the right decisions with how you're going to use this money? Some of that is, is it working for me? And am I investing the right way? But also, do I have a bunch of holes in the bottom of this leaky bucket and I'm just being inefficient and I'm paying things that I don't have to pay? I'm thinking about waiting to take Social Security so I get more money. Meanwhile, all my expenses are going up in the meantime and I'm drawing too heavily on an account. So chances are if you've saved money, really any money, you're going to pay taxes on your Social Security. And there's plenty of conversations we get into. Let's think about a Roth conversion. And I know I'm saying lots of things here, but people have a tendency, how can I get my taxes down this year? How can I save money this year? And when we talk about life, when we talk about retiring, we're talking about the rest of your life. We're talking about having a plan. We're talking about, are you doing the right things today for today, but also so you're in a good spot 5, 10, 20 years down the road, and taxes are such a big part of that. So I would encourage people, don't be short-sighted. Don't say, "I don't want to do a Roth conversion because I don't want to pay the taxes on it." The whole reason your advisor might recommend that is to save you money in taxes, to put you in a better spot where, most importantly, you have options. So you're not reliant on one thing. Just like you don't want to be reliant solely on Social Security to live your life, you don't want to just have to pay taxes on every single bit of income you're taking out as well. So a good plan has flexibility to it, because if there's one guarantee in having sat with so many people on this journey of life and retirement, is we don't know what's going to happen. And we've got to anticipate needing to make changes in the future because you have to or because you want to. And the last thing you want is to be stuck and, well, I guess this is what it is and it's just how it's going to be because I didn't think about this. And why would you? Because you've never gone through this before. So I would lean on the people that do have the expertise, that do have the experience having done this. And it's an honor, I know it is for both of us, to sit with folks and be a guide on this journey, because this should be the most amazing time, and it can be. So we're honored to help.
Yeah, you're exactly right. I think a lot of folks address the income from a gross standpoint, right? Or on the other hand, they address the expenses from a net standpoint. Okay, my life costs me $5,000 a month. Well, if that's what's actually going out, and your income is such and your assets are such, maybe your life actually costs you $7,500 a month before taxes, right? So oftentimes when you're getting quoted this Social Security figure, one, it's before taxes. Two, it's before Medicare. And I know it's very easy to think, okay, I see these numbers on paper. I know what's coming in. In the back of your mind, right, the job of a financial planner is not only to, really just make sure that we're living in the reality of the world we live in, from an income, from an expense standpoint, from an expectations and an inflation and a growth standpoint, all that stuff. conversely to that, I think, okay, the job of an accountant, like you mentioned, Eric, their job is to minimize the taxes you pay for this year. I'm talking to my accountant right now as I'm, starting to think about filing taxes, and it's how can we get deductions, right? How can we minimize your tax bill this year? Oftentimes, on the contrary of that, I'm having conversations with clients who are now retired, who are now in the lowest tax bracket they're ever going to be in. And those conversations are very direct as far as how can we increase the taxes that you owe this year. In other words, let's move money from the IRAs into the Roths. Yes, it means you're going to pay more taxes now than you, quote, need to. But in doing so, it could mean saving hundreds of thousands of dollars in taxes over the rest of your life. It could also mean leaving more assets behind in a more tax efficient way and things like that. So again, where the job of an accountant is to minimize the taxes you owe today in this year, right? It's kind of a look at a point in time. Our job as advisors, as financial planners, is how do we minimize the taxes that you're going to owe over the next 20 or 30 years of your life? And furthermore, in a world where you're not even here and you're leaving money behind, how do we minimize the taxes that your heirs will owe, right? So little things mean a lot when it comes to this, but it's all about knowing what's coming in, what's going out, what tax bracket you're in today, what we project that tax bracket to be in the future. And, more often than not, we're having a lot of conversations with people today about buying taxes. Let's buy some taxes when they're on sale, right? So just a really interesting way to think about it. So folks, if this conversation is relevant to you, if it's a conversation that you're looking to have, how do I navigate Social Security? How are Nick and Eric and the team, how are they helping people address this? Well, you're in luck. We've got a decisions guide for all of you. It's actually our Social Security decisions guide. Text the word social, SOCIAL. Text our team at 800-757-0436. We'll get you your copy of the Social Security decisions guide. It's a really good book. It's just going to help you navigate, okay, what questions should I be asking Social Security? What type of filing strategies? You already mentioned, Eric, there's 350 ways to file. Of that, which could be the most beneficial, not only for me, for my family, for my spouse, for my kids. So again, it's a very, very, and I would really argue it's probably one of the biggest financial decisions our clients will ever be faced with is how do you navigate Social Security? How do you make that decision? So I could not recommend this resource anymore. Text the word social, SOCIAL. Text our team at 800-757-0436. We will get you your free Social Security decisions guide. So Eric, here we are. We've got a couple mailbag questions. So viewers, listeners, it's worth mentioning if you want your questions answered, well, we don't know what the questions are if you don't send them to us. So text us your questions, email us your questions, and you might just hear us address it on our next Mailbag Minute. So first, Eric, we've got a question about Social Security and pensions. Is it worth contributing to Social Security if you're collecting a state pension? It's an interesting one.
Well, often you don't really get a choice whether or not you're going to contribute to Social Security.
Sure.
If you're working, you're contributing. What I would encourage people to look at, particularly with pensions, there's a commonality. There are commonalities when you get into Social Security. Pensions, there's not. Employer to employer, they are drastically different, as are each person's family's individual situation. So look at, should I be triggering this pension? Do I take a survivorship? Do I take it as a lump sum? Because those are 100% irreversible. And if you mess that up, you might regret it the rest of your life. So back to Social Security, I remember speaking years ago and I'd share the statistics of, when Social Security was first introduced, how old did you have to be to get that benefit? And you had to be 65 years old. And if you were born that year, what was your life expectancy? And it was 64. Dead. Your life expectancy was dead before you get this benefit. So now we've had all these advances in healthcare, in nutrition, in everything. Humans are living much longer. That's great. And yet the Social Security age has gone down, right? What I'm getting at, just because you can trigger Social Security at 62 doesn't mean you should. Full disclosure, I'm a huge advocate of drawing it at 62 if you can afford to do it. Because that's a huge mistake people make, is drawing that benefit because it's available to you and you shouldn't have, because you got to save more. So be looking at that. Just because you can get it doesn't mean that it's the right time for you to do that.
Yeah. On the flip side, I always remember a saying that that I heard you say in some of my early days here at the firm. You say, take your Social Security as early as you need it if it doesn't result in being penalized for doing it. So in most cases, if you're still working, if you're still earning, if you're still in that accumulation and that saving phase of life, continue to do that.
Yeah.
If you don't need your Social Security, let it continue to grow. And as you earn and you have those higher earning income years, you're going to increase your average. It could lead to more Social Security in the future. But if you are 62 and you're retired and you don't have income, right? Sure, you might have assets and you might not, quote, need Social Security, but at the end of the day, you need money from somewhere. And I'm a big advocate as far as, taking the money from Uncle Sam, take the money from the government, take the money from Social Security, because it'll allow you to have a lot more flexibility and control over the money that you then have living and working for you. Money that can be working harder for you, money that can be left behind if anything happens to you. You die, your Social Security stops. Sure, there can be some survivorship benefits and things like that, but it's just something that people really need to know how to navigate. Our next question is all about working while receiving Social Security. I'm still working. I'm collecting Social Security. Why am I still having Medicare and Social Security deductions come out of my payroll? Why are we still paying the FICA taxes even though we're still working and already collecting Social Security?
Because that's the gig. Yeah. And, so that's something you want to realize before you trigger a benefit, not after. There are no absolutes in financial planning and life. And, I also am mindful of not having all of my answers be, well, it depends. But it does. There's not a lot of scenarios where I think it is advantageous to continue to work while drawing Social Security, because you're making $60,000 a year, and I'm going to trigger Social Security, and that's going to pay me another $24,000, and now I have enough money to live. Whoa! I mean, what happens when you're not working? So you might, take a hard, long look in the mirror and say, "Hey, do I not have enough income, or am I just bad with money?" So, if you don't have enough, you don't have enough, but also be honest about what your lifestyle is. Most people approach retirement not having a budget. It's not the most fun thing, but I also want to reframe that having a budget is not about restricting spending. It's about knowing what you're spending your money on. So maybe you can be more efficient about it, because you don't need to save for retirement in retirement. The only money you should be drawing out is money that you're actually going to spend. The rest of the money should stay in your plan, hopefully growing tax efficiently for you, so you can continue to increase your lifestyle, your income, or whatever it's going to be. So back to triggering Social Security while continuing to work, just like you were saying before, Nick, like we all want more money. We don't all need more money. So you might have been better off deferring that. But yeah, if you're if you're still working and you're drawing Social Security, you still got to pay into it. And that is frustrating for people.
Amen. Our final question here, Eric, is all about survivorship benefits. The question reads, if my wife starts receiving Social Security benefits and I should pass, will she get my payments in addition to her own?
So the actual language on this with Social Security is, well, you kind of get some of this benefit and you get some of this, and it's just confusing. You get the bigger benefit. We'll keep the math simple. Like how they're actually calculating that. So you don't get both. You get the larger of the two benefits. That's a very understandable question. And that is sometimes why it makes sense to trigger one person's benefit and not the other person's benefit. But something you were talking about before, Nick, is just Social Security. My wife, Megan, and I, like, if we're both gone, that Social Security, it ceases to exist. It never occurred. And then whatever money we have goes everywhere that we want it to go, right? To our children or to UConn or community, who knows, right? But so if you are retired and you do need income and you have all the money you've ever saved and you have Social Security, so you have, your money and someone else's money, heck yeah, you should spend this money first. That's Social Security. Make sure you get the value out of that system. And these questions that I know scare a lot of people, is Social Security really going to be there for you? Well, if you're 60 or 65, I wholeheartedly believe, yeah, it's going to be there for you. But make sure you get everything that you deserve out of this system that was created to help you have a great retirement. and just make sure you know all the rules going in and not after the fact. Because people do make a lot of mistakes when it comes to that Social Security decision.
It's easy to make mistakes when it comes to Social Security, right? There are so many different filing strategies. There's a million different ways to file. It is confusing, almost by design, unfortunately. And the reality is, all of you out there, viewers, listeners, I mean, you've been working 20, 30, 40 years contributing into the Social Security system. You deserve to have a really good plan in place when it comes to how you're going to start extracting that money. It is very much your money. But again, little things mean a lot. You need to have a plan in place with going about how to file. You don't want to make that mistake. Oftentimes it's not reversible. So make sure you have a plan in place. Get your copy of our Social Security Decisions Guide. Again, text the word social, SOCIAL. Text our team at 800-757-0436. We will get you your Social Security Decisions Guide. If there was even, a few things that Eric or I said during this podcast that kind of piqued your interest a little bit, get your hands on that guide. It's a really good way to just help you take a step back, take a deep breath, and help you address what could be one of the biggest financial decisions that you'll ever be faced with in filing for Social Security. So again, one last time, text the word social, SOCIAL. Text our team at 800-757-0436, and we will get you your free Social Security Decisions Guide. So viewers, listeners, we appreciate you joining us as always. Eric, my friend, good seeing you. Thank you for your advice. Thank you for your guidance. Thank you for the work that you do for your clients. And everyone out there listening and viewing, we look forward to seeing you next time on the Money Wisdom Podcast.
Johnson Brunetti is a marketing name for the businesses of JB Capital and JN Financial. Investment advisory services offered through JB Capital LLC. Insurance products offered through JN Financial LLC.